Okay, so 1st November, let's have an old school recap since the market's just closed. Starting with the SPY. So now that it's been 3 days, it's a bit more confirmed here that, this previous support here, let's call it 388 on the SPY-ish, it flushed, it retested quickly here. And now again, after 3 days, I think we can confirm this is basically, at least for the SPY, the resistance point. Pretty bearish candle. It's not the biggest drop, it's only 0.5%, but we opened higher than the previous 2 days, closed lower, so just nice big red candle. Pretty bearish. Now look, tomorrow is the big Fed day, so today was irrelevant. Even yesterday was irrelevant. The whole week, even last week, everything is irrelevant because tomorrow will be a big move. It really should be, and it should indicate the next couple of trading days. Now, my thesis is still that you're supposed to get a 75 basis point move and you're supposed to have the market move down. I do think it's possible to get a 50 basis point move, which should be a big surprise, even though more people have been talking about it recently. But I still don't think that would propel the markets too high for too long. So I think the real surprise would be how markets drop, even if we get 50 basis points. But now I'm getting really a bit too far into the conditional prediction. So I just think that it's possible. And my thesis remains intact, being we go lower, new lows, A, B, C, D, E, Elliott wave move down, whatever you want to call it. But we take out this nice, basically bullish engulfing candle. So I think we're going to go lower than 350 in the next couple of weeks, even if we get a 50 basis point move up. Because, they're going to do several meetings. If they do 50 basis points, they'll do that for several more meetings. And then even when they level off, they have, 4.5%, whatever it might be, even 5%, then they have to keep the interest rate there for several months, and something will break before then, and the stock market will be going down as it breaks or leading up to that break. So for me, fundamentally, the markets go down kind of no matter what happens. So the SPY, I think after 3 days, we've got this as our resistance. The Nasdaq weaker, and I think today again, Google and Amazon. Just quickly check this. We're down 4-5%. Well, yeah, these are the leaders. Microsoft was red, Apple was red. So, the Nasdaq is pretty weak for the whole week. So that doesn't surprise me that it was down 1%, underperforming the others. The Dow Jones, it wasn't that weak compared to the others, but same sort of candle. I wouldn't call it as bearish or as engulfing as the SPY, but same thing. They have to follow each other. Having said that, the Russel was green, but still, open high, close red. It's kind of a reversal candle. So just below the longer term downtrend line, they seem to be finding resistance just below. In the Nasdaq's case, substantially below. But so for me, reversal is ready to take place. But who knows what happens tomorrow? If there's a surprise, a 50 basis point, and the market likes it today, and then everything this week so far would have been irrelevant. So the VIX, the opposite is the case. We've got 3 sort of daily candles where we find support around 26. That makes sense. Let's move on to the DAX is irrelevant. I'm not going to look at that because same sort of thing. That was a bit more bullish, up 0.5%. Took out this descending line, but again, everything hinges on tomorrow. The dollar, it actually had a bit of strength, so it was kind of an irrelevant day, sideways, but it did recover a lot of its drop and basically closed unchanged. So it's ready for a move in either direction. It's really in no man's land. I still think the path of least resistance is up. If it goes down, you're going to get some support down here. It could flush down here. I hate to cover both possibilities because, it's almost like I'm not giving a concrete point of view, I still think that it goes up. If it goes down tomorrow because there's some surprise 50 basis point, it'll be short lived. It might get down to 105, but basically it'll go back up. That's what I truly think. So if you're going to hold cash, I still think holding the dollar is the best thing. Yeah, I'd have to side with the bullish case. But of course, everything hinges on tomorrow. Let's look at interest rates, which usually follow the dollar. And to be honest, I think they did again today. Yeah, look at that nice hammer. Basically recovered all its losses. That's the 1 year, 2 year. Again, being very strong, outperforming the 1 year. And to be honest, I think it's still the strongest of all the interest rate charts. The 5 year, you got this hammer also, but not as high up as the 2 year. The 10 year, the most important one. A nice hammer ready to break out. Everything is basically coiled and ready for Fed day tomorrow. The 30 year is quite weak today. So yeah, interest rates ready to spring higher. I think if there's 75 basis points, I think interest rates go up just like the dollar. And then as interest rates go up, obviously the markets go down. So I think we'll return to the old regularly scheduled programming, let's say. So that's markets, dollar, interest rates. Let's take a look at gold and silver now. I did for the first time ever a video in the morning or during pre-market because there was some early strength in the metals. Gold was up 1%. We did give some of it back, but not too much. So gold just below 1650 at 1646. Very coiled here on the descending trend line. I mean, yesterday I said it was bearish. Now I think it's bullish. To be honest, it's ready for both. It's getting very tight here. Obviously, we've got support down here at 16. Let's call it 15, 1620-ish. If we flush that with volume, with news, then we go straight to 1600 and we probably take that out. And I think I already indicated, plus you can see it 1570-ish. That's where the support is for me. But then again, if we take it out, it's going to be a violent move up to 1720. We still have a bit of resistance to take out at 1670, but I think Fed day tomorrow is all you need as a catalyst. If it's 50 basis points, we go up. If it's 75, I think we go down because that's the way the market's been moving. You know, gold's kind of been weak along with the general markets. And if it wasn't for today, it'd be looking very bearish. So if there's a bearish reaction, straight away we're going to be down here. And I mean, it's pretty much all she wrote. Silver, on the other hand, is still really outperforming. I think if we get a 50 basis point indication, we go up, obviously, straight to 21, probably on the same day. If we get a 75 basis point move, I don't even know if we get to $18 in one day. Probably not, because it really is showing a lot of strength. And again, a lot of rumors of real physical shortage in the 8% is asking way too much. Yeah, we probably are going to be trading on the $19, but I think we need at least 2 trading days if the Fed announces 75 basis points to get back down to $18, and maybe even next week to take out the lows. So silver pretty strong. Now let's look at the GDX, GDXJ. It really did respect this downtrend line. We opened pretty high. Well, actually, no, we opened where we are, but we sort of were quickly, in the first few minutes, we were testing the highs. That's with silver being up sort of 4% at the big pre-market. So we were ready to take it out, but then we basically just drifted lower for the whole trading day. So the GDX is sort of just sort of repelled a little bit from this descending breakout, which is my favorite type of chart pattern to play. Again, tomorrow we'll decide it. Tomorrow, if it's bullish, straight to 26 on GDX and straight to 32 on GDXJ. Very simple stuff. And if it's bearish, then we'll probably trade for the GDXJ 29, and then the next trading sessions as the market starts to crumble back down here. but I think it's a great accumulation. This is my favorite type of chart pattern to play on the bullish side. You can play the breakout, the retest of the breakout, but also the sort of the flushes, because it's generally quite bullish, this chart pattern, especially after a washout, and especially if the fundamental macro sort of backs you. In my opinion, you know, fundamentally, gold is a great bet. So that's the GDXs. And I'll just keep it short and sweet. I'm not going to bother going through any large caps tech stocks. One other commodity I haven't covered enough is uranium, actually. I'll just quickly go over that because we have Cameco, which is a stock I still don't own and would love to. But for that, I need uranium to flush. And to be honest, uranium, it could flush. And this is one of the ETFs. I mean, this obviously has a lot of support down here around $18, but I'm just wondering if there's follow through. We could really crush 18 and then start venturing lower. It's just a lot of people are in uranium, and I just feel like no matter how good the story is fundamentally, you do tend to get these technical breakdowns, these pullbacks even during a bull market. I mean, this is a bull market for uranium. Yeah, I just thought I'd mention that. I want to start covering this a bit more, so I'm not going to go into too much detail on this one, but Cameco, I wanted to own it a while ago, and just watching it scream high was very annoying. And then whilst I was on holiday recently, it came down here. I'd love to buy it in the 20s. And to be honest, if it gets to 20, it probably means that, well, it would mean that it's broken this ascending line and therefore has a chance to really flush lower. It depends what the general market's doing in the sector, but I'd love to buy this below 20, long-term hold. Yeah, that'll do. Crypto, not going to bother covering that because it was pretty much a nothing day. Everyone's waiting for tomorrow, so let's all wait for tomorrow. It should be fireworks tomorrow. So good luck, and yeah, see you tomorrow.